All right, what's going on, everybody? Hope you're all doing well, and welcome to today's video. And in this video, I'm probably going to sound a little bit odd, and that is because I just naturally sound that way. But my baby's asleep in the other room, so I don't want to wake her up. So I'm kind of whispering, but I think this, well, what I think is a calming voice I've got right now. I hope it can bring a sense of calm to you in this current moment, because as of right now, as I'm filming this, the market is crashing, and I think it's pretty important to talk about this thing. So I want this video to bring a sense of calm to what feels like a pretty chaotic time that we're living in. And I'm not going to get into like the whole nitty and gritty details about why the stock market is doing what it's doing right now. But as of me recording this right now, honestly, it's not looking good, bruv. So this video is aimed more at people who are early on in their investing journey, people who are maybe looking at their portfolio right now and just sweating bullets, second guessing every decision that they've made. And I guess, people who just, anyone who's really watching the market right now and thinking like, what on earth is going on? So before I really get into everything, I just want to, like a quick disclaimer. I'm not a financial advisor. I am literally just a normal guy investing my own money, and I'm just talking over gameplay footage. So take that as you will. Right. So as things stand right now, I've got a pretty large amount of money spread across different stocks in the market. I consistently invest a big portion of my salary each and every month into various things. And from the start of the year, I have pretty much been up. I have been down a few times, but right now, as I'm recording this, I am down more than I ever have been at this point so far. And I'm not going to lie, it doesn't feel great. It does make you feel naturally a little bit shaky. And honestly, it's completely natural to look at your investments and see that they're not performing how you expected, or worse, they're doing pretty bad. And you really start to question everything like, what have I done here? And I really think that the part people just need to understand, the market throughout time has always moved like this. It's gone up, it's gone down, it's gone sideways, it does loop-de-loops, it does everything. There are great days, there are great months, and there are also bad days, bad months. And I keep seeing people online in like forums and comment sections everywhere, and you can tell a lot about them. They're pretty new to investing, and they're already panicking, asking questions like, when is the market going to go back up? Should I sell? Is this the end? Am I buggered? And honestly, this is a tale as old as time. The market, in my opinion, is basically like a repeating story. What I mean by that is we've seen this all before, over and over again. Nobody truly knows what the market is going to do next, apart from like maybe Nancy Pelosi. And the average person like you and me, we just don't know. If you go back and look at the 2008 financial crisis, that was a time where the market was just destroyed. Stocks were down bad, companies were collapsing, people genuinely thought that the system was broken. And if you were investing in that time, I can imagine it must have felt awful. But what happened after all of that? The market recovered. And not only did it recover, it went on to reach levels that people back then thought wasn't possible. So all of these stocks that were just insanely low during that crash, if you were buying them during the crash and you held and held and invested more, you could very well end up with a lot of money. And that brings me onto something that might sound a little bit weird, maybe even a little bit dumb to say out loud at first, but I want you to hear me out. You actually do not want your investments to constantly go up and up forever. I'll pause there. I'll let you just think about what I just said there. I'll say it again. You actually do not want your investments to just go constantly up and up forever. Because you got to think of it like this. Let's say you buy a stock at $10, it goes up to 20, then 30, then 40, and so on and so forth, and it never really dips. Yeah, it looks great on paper, but every time that you're going to invest more money, you're actually buying at a higher and higher price. Now, when you compare it to a stock that goes from like $10 to 5, up to 20, back down to 5, then up again, it's moving all over the place. That's, I hate this word, I struggle to say it. Volatility. You know the one I'm trying to say. I really struggle with that word. But that up and down movement actually gives you opportunities, because when it drops, you can buy more at a lower price, assuming that you believe in this stock long term of that company or whatever it may be. But that's the key point. You don't want to keep on buying at the high point. You want to be buying things when they're low, or at least lower than when there's fear in the market, because you believe that these things that you're investing in will recover over time. Because naturally stocks go up, they go down, and that's just not a bug. That is literally the game. That's how it's played. This is how it works. And This is why I personally don't believe that people who try to time the market, I'm sure there's people out there who got really lucky in the past, but that is just nothing that I would really rely on. Because unless you've got like a direct line to Nancy Pelosi, it's just, you're going to have a tough time. So good luck with that. It's incredibly difficult to consistently predict when the market is going to go up or down. Instead, I believe in something that is just much more simpler, and that is time in the market always beats timing the market. And here's why. So, when you invest over a long period of time, you naturally go through all these phases: the highs, the lows, the crashes, the recoveries. And historically, the longer that you stay in the market, the more you go through those dips, they start to matter less and less because the overall trend over years, over decades, has generally been upwards. So instead of stressing about what's happening this week or this month, the real question becomes, where do you think that you're going to be in 5, 10, 15 years from now? Because if your answer is, well, I'm going to have more money than today, then moments like this are, I know they're uncomfortable, but they're nothing to panic about. They are part of the process. And I'm going to be completely brutally honest here, and it might sound a little bit harsh, but if you're brand new to investing and you're already looking for an exit route, then I'll be honest with you, I think this just isn't for you. And that's not me trying to be harsh for the sake of it. It is just the reality of what it is. Because this game, it comes with ups and downs. And if the downs are enough to make you really want to quit early on, you are just going to struggle long term. And I get it, it's not exactly the most pleasant experience, but if you've got all this money thrown into something and it absolutely starts plummeting, and you've got no real like understanding of what's going on or whether that money is ever going to come back, yeah, it's an awful feeling. And if that's the case, then I think you probably just need to rethink your strategy, because for me personally, I don't just throw everything in and just hope for the best. I think that is not the right way to go around things. I think you need to create like a battle plan. I invest a portion of my income every month that I'm comfortable with losing. So money that, if the market does what it's doing right now and it's just absolutely plummeting, I'm not going to be losing sleep over it. For one, I invest consistently into the S&P 500, so I'm getting exposure to that broad market. And then alongside that, I invest in like individual companies that I really do take the time to research and look into. I'm keeping an eye on every industry. I'm watching trends. I'm looking at how things are evolving and moving over time. So I'm not just guessing, oh, that company sounds cool, I'll put £10,000 into that, and then it just plummets. It's just not a great way of going about things. So because of my battle plan, I do try to keep my portfolio fairly diversified, different industries, different sectors. So if one area is having like a rough time, then the other industries kind of pick up the slack and kind of help me out a little bit and balance the books, right, basically. So more than anything, it kind of just helps me stay calm. So moments like this, like right now, where I'm looking at my portfolio and it's more red than I've ever seen it before, that it's not great, but I'm not panicking, I'm not scrambling, I just accept it for what it is. It is a part of the game, and I have made these decisions that I have thought through, and at the end of the day, if I lose my money, that's on me. But I've also set up myself in a way where I'm not relying on this money to survive. I have emergency funds in place, I've got savings, I've got a plan where, if this doesn't work out, then I can do this and that. And if I'm completely honest, I haven't actually cashed out any of my investments for like over 2 years now. So I invest into things that I really do believe in. I'm not really one for like day trading or like quick wins. If that's what you want to do, then all power to you. But I'm in this the long term. I want to see my investments grow. I want to see these investments compound, and I want them to turn into something a lot more and a lot more meaningful over time. And maybe one day I'll cash out because I genuinely believe that this is peaked and it's not going to get any more than this. Or maybe I will just cash out because I'm older, I've done that work, I've built something that I can now reap the rewards from tax free, and that's the goal. So to get to the point where I'm kind of coming across, I want to get to that point where I've got that freedom, where my money is now working for me, where instead of me just working for money, it kind of flips itself and it works for me, where you can live the life that you properly want to live without constantly stressing about money and bills and stuff. So if along the way that turns into something that I can pass down, for like my kids, like I can build like generational wealth with the stock market, then wow, that's amazing. That is something I'm actively trying to do. But that's the kind of long game. Maybe I can talk about my plan in another video. But yeah, that hopefully this video just kind of calmed the storms a little bit for you, gave you a little bit of insight because I know it can be awful and it can be stressful, but hopefully it's made you take a step back for a second and really rethink things and see the bigger picture. And, for those of you who are still, you've watched this video and you're just really like, nah, I want out, then I hope it works out for you. I hope you get everything back and, make a little bit of money. But I do think for your own mental health, I think you should probably just, yeah, not investing might not be for you. It is a very stressful game, but don't let it stress you out. You got to build some sort of grit. And yeah, I can understand people just very new to it and being like, yeah, no, this isn't for me. And there's no shame in that, honestly. There's no shame in stepping away from it if it just doesn't feel right for you. But for those of you who are going to stay in it, you're, as I said, trying to build some grit. You're going through the noise and seeing the red days and the doubt. It's a tough work, but I'm right in there in the trenches with you. So I hope if you got any comments and any insight or any views, and you agree with what I say, and if you disagree, please do let me know in the comment section below. But I hope that this has helped you in any way, shape, or form. And one thing I find quite interesting about myself is I actually feel like I've learned a little bit more about myself since I've started investing. I've understood my emotions and my own risk tolerance, where I've put X amount into whatever stock and I'm like stressing because it's plummeting and plummeting. Do I leave it? Do I keep it there? And these things you kind of just you learn from, you make mistakes and you adjust, and you do just get better over time. If you're just dumping piles and piles into something that might not work out, then that's on you. I think you need to have like some sort of some education behind what you're investing in. And over time that experience becomes more valuable than any quick win could really ever give you, because any and everyone can feel like an absolute genius when the market is flying, but staying calm when everything looks like it's just absolutely falling apart, that is a big difference. So whatever you decide to do, I hope it all works out for you. And if you enjoyed the video, please feel free to leave a like, comment, or subscribe if you are new. And if you have any video suggestions or anything you want me to talk about, please do let me know in the comment section below, because I am willing to talk about pretty much anything. And with all that said, I will leave you in the very capable hands of Goku, absolutely clapping cheeks. Thanks for watching, and I'll see you guys in the next one. Peace.